Nice to see you all. Dom Griffiths, PPA originator at Brook. So my role, I've been there for about 3 months now, so still relatively new to the business, but certainly not new to the world of PPAs. About probably 10 years experience now in PPAs, energy supply, wholesale markets. And my role within Brook really is to sort of lead the upstream origination function, so working with renewable developers, asset owners, to increase the number of megawatt hours that we purchase directly from renewable generators, with a view to offering some of that power to our customers via corporate PPA sleeving arrangements, so that we can move away a little bit from kind of the traditional energy purchasing model through to a kind of slightly more interesting, kind of sophisticated model where we're incorporating sleeving and PPAs into their overall energy mix. So just to touch on Brook a little bit more, because I'm sure some people in the audience might not necessarily be familiar with this. So we are an energy supplier, a predominantly I&C energy supplier in the UK. We're the largest independent I&C supplier, and we supply about 4 terawatt hours of power and about 5 terawatt hours of gas to I&C customers. And historically, we kind of do everything from kind of traditional energy supply business, so from hedging, energy procurement strategies for our customers using our trading desk, billing, settlement, all of the kind of traditional roles that you'd expect from a flex I&C supplier. And as I said, we're moving away from the traditional model where a lot of power is bought on the wholesale market alongside the associated regos, to slightly more kind of interesting, kind of innovative models around incorporating renewable generation into the mix. So looking at sleeving, looking at corporate PPAs and how we can incorporate those into energy procurement strategies for some of our customers, but also looking at more granular matching of regos as well, and rather than just purchasing regos on an annual basis, looking at how we can perhaps more granularly match some of those regos onto our customers' portfolios. So sort of moving away from what we think the role of a traditional energy supplier is to a slightly more kind of interesting and innovative model. And as I say, we've got a handful of, we're relatively new, I suppose, to the PPA market. We've got a lot of we've picked up a number of PPAs historically that we actually trade flexibly on behalf of the generators. So we've got a range of different technologies that we work with. But my role is really to come and sort of grow the origination book and to expand the number of generators we're working with, enable to offer more of those megawatts to our customers, in order to provide more kind of innovative green solutions.
Fantastic. Sweet. Now that you've gotten to know us a little bit, we're going to be the ones to interact with you now, and we'd really like to understand a little bit about your profile and where you kind of sit in this whole PPA market. So very simple, just raise your hand when I say if you fit this category. If you're a generator, can you raise your hand?
Wow.
No generators.
Wow, I've never been in an audience before with no generators.
There you go.
Wow. I'm in the wrong place.
So we'll be talking a lot about them without any of them actually being in the
utilities? Any utilities around? Oh, 1, 2.
Oh.
Okay. Any regulators?
Okay.
Nah. What about buyers? Any of the buyers of PPA contracts? 2. Another one down there. Okay. Aggregators or flexibility software platforms or anything like that? A couple here, there. Definitely the bulk.
Consultants?
It's a stack full of consultants.
Yeah, okay. That's still only about half the audience. What are the rest of you?
Anyone want to just, that I haven't touched upon? Developers?
Okay.
What'd you say? Finance.
Okay.
Another topic. Investors. Okay. Installers. Okay. So we do have a mixed bunch, just no generators. Okay. Keep that in mind for your answers. Thanks for the engagement. So my first question is a bit of a setting the scene question. And I mentioned it before in the speakers lounge that I don't want this to sound too negative, but definitely with all the policy shifts that we're seeing, different corporate goals, whether it's like CSR, sustainability, and different market dynamics, how do you believe PPAs still provide a strong value in the current energy milieu? And open floor to any of you guys.
Yeah. Okay, I'll jump in. So yeah, I mean, obviously, working on a PPA platform, I've got to say that they provide value. But I think it really splits down into two things for me. You can look at it from an operational perspective for operational running assets. You can look at it for new build projects which are coming online. I'd say for both, it's essential. You need to have some form of route to market. But the differences are for the operational market at this moment in time, we're in a really healthy place as an industry. It's an exceptionally sort of, there's a lot of competition in the market from various different off-takers who all meet completely different profiles in terms of creditworthiness, in terms of the terms and conditions that they can offer in these contracts, in terms of the competitiveness of their overall commercials, and in terms of the types of products that they're offering to generators. So there's more choice than ever before, whether they're looking for fixed power prices, index, framework PPAs, floating, hybrid, sort of combinations of the above. There's a wide range of products out there which suit different renewable generators and what they're looking for. But I think if you have a look at the sort of newly commissioning projects, and we're talking more, I guess, corporate PPAs here, I still think they do offer a really great amount of value to renewable generators because yes, at the moment, it's very difficult to get projects built in a subsidy-free era. There's currently no real support network outside of the CFD, which isn't technically a subsidy, so we'll come on to that in a second. So it's impossible for, well, not impossible, but it's very difficult for developers or for project owners to actually build renewable assets without any sort of long-term security to meet the lending requirements of the banks. So I think the only real way that you can actually get a long-term or a competitive long-term fixed price contract at the moment is through a corporate PPA or through the CFD, which is, again, slightly different and right now slightly eclipsing PPAs, but corporate PPAs are still a really important part of that overall mix.
Mm-hmm.
I come in there. So from Ovo's kind of perspective, obviously PPAs are a fantastic way for us to prove to our customers that traceableness of the power they're actually buying. But for us, for an actual generator's perspective, what we see is that our bread and butter, where we particularly target the market, is on that smaller to medium scale. So we're talking about maybe a 500 kilowatt turbine, maybe a 10 meg solar, 1 meg solar, or even lower, that you could be a community site with a 500 kilowatt solar asset in your fields. And you may not have that ability or know where to go to then sell that power on the wholesale market. So a PPA with a utility like ourselves can really benefit. You don't have to then learn the whole energy scape. You don't have to understand what everything does. You can actually almost offload all your risks and all that stuff to us, and we will pay you for that power at a sort of fixed rate. So it's actually, you can kind of guarantee your income in a sort of more secure way. Something I would sort of comment on Ollie's point about new connections. That's something that as OVO we're really interested in, and all this. If you are smaller and you are building a new asset, you're right, it's really difficult to work out where you can go to sell that power. So we actually, with our tariffs that we do for our domestic customers, they pay into a fund, and we actually, for anyone that is a brand new unsubsidized renewable generator, we pay a premium rate on top of that as well. So it's not a government subsidy, but it's a subsidy in a sense that we are getting our customers to pay for brand new generation to be built on the UK grid, helping that decarbonisation journey for us all rather than that. So, yeah.
Well, go ahead.
So PPAs are just another form of contract, right? Electricity is probably the most volatile commodity on the planet. You can see power prices that go from negative numbers, which is quite an astonishing thing to get your head around. So you can't give it away. You have to pay for somebody to take it away, like landfill. And in the same day, it can be expensive at a different part of the day. So not only is it the most volatile commodity on the planet, here in Britain, we have half-hourly prices. The continent, they have every 15 minutes. But the price changes as you get closer to real time. So the price now might be different to the same price for the same 15, 30-minute period in 2 hours' time. So it's a hugely complicated market. And the reason for that volatility is to get efficiency in the dispatch of the whole system. Now, you need a suite of contracts from spot to longer term contracts to serve different purposes. So the really short term pricing and the spot markets are to get efficient dispatch. The longer term contracts are to help hedge risks. When I came into the market, we had a small number of big generators and quite a lot of retailers. It's now the other way around. We've got loads of really small generators, and the buyers are the big players. So the allocation of risk and even the understanding of the market is shifted. So we need simple contract forms that allow small participants to trade in the market. They need a route to market that they can understand without having to absorb the full complexity of this market that I don't understand fully 25 years after big coming into the game. So PPAs are of two different natures. There's a relatively short-term PPA, and the goal of that is a route to market. It's a short-term contract for the buyers and the sellers. The ones where we spend more of our time is on the longer-term PPAs, which are actually, they help underwrite investments. They're a much more long-term hedge. It's rather a different animal in some senses. And the risks you're exposed to on that are very, very different, including market risk, market design risk. Things can change in the tenor of that contract that you don't have to worry about in a short-term world.
Yeah.
Yeah, without wishing to touch on anything that or just regurgitate what the rest of the panelists say, I'd say maybe it's worth me just talking about it from the sort of corporate buyer view. So, it's easy for me to say I work in the industry, but PPAs are still extremely important, I think, to energy buyers as part of their overall purchasing strategy. Then there's a couple of reasons for that. I think first and foremost, it's a level of, we're moving from a world where buyers predominantly purchase most of their electricity on the wholesale market and then back it off with regos. Mm-hmm. Those regos the authenticity of some of those regos are being challenged a little bit, and the traceability element of some of those regos are being challenged a little bit from some quarters. So PPAs offer an excellent way for buyers to actually point to a named specific asset and say, well, we don't, not only do we buy the regos from this particular site, but we're also purchasing the electricity output that the site produces as well. And that's adding it's a bit of a broad term, but it's adding a high level of additionality to a lot of energy supply contracts that you might not necessarily be doing if you're just purchasing power and regos on the wholesale market. Mm-hmm. Secondly, I think, to touch on sort of Stephen's point around the kind of hedging element, for a lot of energy buyers, long-term PPA, we've seen even in the last 2 months since the start of the year, 2-3 months, we've seen considerable volatility on wholesale energy markets, and long-term PPAs offer an excellent hedging, an excellent way for buyers to manage some of that wholesale price risk and some of that volatility. By fixing a price for 10 or 15 years, you are insulating yourself from a lot of that market volatility. So it's a couple of things really from the buyer perspective. It's traceability, but it's also price fixing and hedging against some of that market volatility we've seen recently, or over the last few years, in fact.
Brilliant. I would like to jump onto the pricing aspect. I like that you touched upon regos already. I think that's interesting that you mentioned that as one of the drivers behind, at least in corporate PPAs. Coming from the flexibility point of view, you touched upon the price fluctuations. So there is generally inherent risk that you are protecting yourself with in PPAs, and that's the inherent value. But where do you see yourself perhaps you're like isolating yourself from the opportunity that this could arise as well, in taking advantage of these price fluctuations, particularly, I guess, for Max and Dom as...
Yeah, I think what we do is we insulate the generator from it, and I think because we work a lot with, I go back to, we work with a lot with the smaller end of the market, so we work a lot with local authorities who really don't want to take on and they've got a larger solar farm or a wind asset that they don't want to take on the risk. They want to be able to say to the leaders of the council to say how much money they should be making at the end of the year. So yes, there potentially is opportunities that they could enter into, either take on risks themselves, and obviously that can lead to reward. But obviously we are I hope to say that we are more the experts in the trading of energy and allowing that thing, so we can offer them a fixed price. And we do discount it to account for risks, but we should be able to, with having a larger portfolio of generators on our books, mitigate those risks as best as possible, as opposed to let's say a local council trying to trade their energy in a either shorter term market or on a sort of more bespoke way.
Yep.
That similarly works with then communities, but also if you even can be a large developer and want to mitigate your risks, you may want to trade some of it on short-term markets and do things like that, but you may also want to lock in a 1, 2, 3, 4 year contract with a entity like OVO, where you then get that price certainty, and you can mess around and play around with the other stuff that you do.
Yeah.
And I guess, from my point of view, it depends. Speaking at it from a customer point of view, it depends on the risk appetite of the individual corporate involved. I certainly think, as a buyer, you would never do 100. Would never fix a price for 100% of your consumption via a PPA. You would probably do 10 or 20% of your annual consumption. And you would layer on specific hedges under, different PPAs, but still leave a considerable amount of your consumption exposed to the wholesale market. And also, so I guess it depends on your individual risk management strategies, individual risk appetite. But, I think the vast majority of examples that I've come across in the past, you've seen buyers, they've looked at anywhere between sort of 10 and 30% of their annual consumption fixed, because that insulates them, but they still leave quite a bit of exposure to the wholesale market.
Stephen, I don't know if you wanted to jump in on that, because
Well, just the point that the physical PPAs are a relatively simple tool. As the markets get more volatile and more risky, you need a lot more dynamic trading. So the fact that you've got a physical PPA and you're taking somebody else's offtake doesn't stop you from trading it. It just passes that power into somebody else's hands. So if you've got a surplus at certain times, you can offload it. If you've got a shortfall at other times, you can still buy it in. So from a buyer's perspective, the game is to buy a portfolio that kind of matches your needs. If you've got physical flexibility as a consumer, the volatility is your friend, because you can avoid the very high price periods. So if you've got power that you don't need to consume at the times when that power is really scarce and really high value, the existence of the PPA doesn't take away your incentive to be flexible. And that's where I think the really sophisticated buyers are moving in, figuring out how they can avoid the really high times, the high price times. So whether you've got fixed price electricity or not, you can still sell it back on. And that's where the more sophisticated players are getting involved in the actual dynamic market trading.
Yeah, that whole flexibility piece is becoming way more of a topic for different generators, and I'm sort of representing the generation side because there's not many people here today to do that. But I mean, with CFDs at the moment, one of the big sort of considerations in negotiating those contracts is not just the discount that you can get to the IMRP and therefore how competitive the price elements of that contract are, but it's understanding how those contracts are going to react to negative price periods, which is something that we're seeing a whole lot of at the moment. There's a massive increase in 2024, particularly for solar generators, because obviously during the summer, generally power demand's at a lower point. We've got huge amounts of solar capacity coming online. So it means that those moments of peak generation, we're getting instances where there's just too much power on the grid, and those prices go negative and those assets have to shut off. So I guess factoring in how adaptive the PPAs are to that, or how well they can respond to that, is probably going to be quite a big thing for not just the CFD contracts, but corporate PPAs and any form of index contract moving forwards.
Yeah, brilliant. I'd like to pose the next question to you as well, before opening up to the floor. So I think this ties nicely into our, I guess, the discussion around standardization of contracts. Pricing is a big aspect to that. I know this is something that the European Commission is working on. We have a Smart End member that's in this group. Good luck to them, anyway. What is your opinion on this? Is this a viable thing that can be done, or is it just unavoidable based on the variabilities within a contract?
So again, we've got a couple of considerations here. Are we looking at operational shorter-term utility PPAs, or are we looking at corporate PPAs? So in the utility space, absolutely, standardization is possible, and I'm going to come on to it in a second, but I'd get shouted at if I didn't plug Renewable Exchange's own standardized contract, the Lightning PPA. But putting that to one side for a second, we're in a really sort of healthy place as an industry where, compared to other markets, the contracts that we have for short-term PPAs are leaps and bounds ahead of other markets for just how much of a similar structure they already follow and a similar framework. And what this means is it's extremely easy for generators to review and enter into different PPAs on a sort of 1 or 2 year basis with new off-takers without having a lengthy legal review process or involving extra legal resource. A lot of the contracts have all stemmed from the first PPAs that existed in this space sort of 20, 25 years ago, and have kept a fairly similar structure, which is, as I said, just enables that much quicker review process. To give an example as to how different it can be, in this, with short-term utility PPAs, it's a little bit rarer, but we've seen contracts be tendered, executed, and sort of signed within a day before going out to market, getting those contracts signed. Whereas in Germany, I remember being at one of the wind energy conferences and telling that story to a German generator. And I was just met with stony silence because they couldn't quite believe that that's how quick and easy it can be here in the UK, when just negotiating a standard 1 year basic contract can take up to 3 months of back and forth over those different elements. So there's a lot of inefficiencies out there in the market which don't exist in this one here in the UK, which is great. On top of that, we've also worked quite hard to create a really standardized set of terms and conditions that are very neutral. They don't favor the generator, they don't favor the off-taker, and that just, again, means that as a generator, you can review that contract, understand the different risks and terms that are associated with it, and just know exactly who you can contract with before going out to market. So when it comes to execution, it means those generators can be much more reactive to power prices, to high power prices, and they can respond and get a contract signed when it's more beneficial to them.
Yep.
I think the flip side of that is looking at corporate PPAs. And I think, Dom, you might have a bit more experience of this as well, but from the ones that we've sort of worked with, this is absolutely not the case in the UK. So obviously they're much longer. There's a completely different risk profile associated with that. And there are a lot more kind of bespoke elements that need to be negotiated and taken into consideration when securing one of these contracts. So I think there's a great need for standardization there, but I might pass it across to yourself for this one.
Did you want to?
No.
I think we need to make the distinction between short and long-term PPAs. I think on the short term, there's, in the short-term utility PPA market, there's a lot of liquidity. There's a lot of buyers and sellers out there. I think the terms are pretty well understood between off-taker and generator. I think the balance of risk between the parties is pretty well understood. So I think that is a market which is becoming more standard, and organizations like Renewable Exchange are doing good work there to create market standard terms, which is a fair blend of risk between the parties. I think you need to make the distinction between that and the long-term PPA, or the long-term side of the PPA market. So this typically, anything long-term, obviously gets scrutinized in considerably more detail than it would do if it was just a 12-month contract. If we take the corporate PPA as an example, I mean, I've worked on a couple of deals, and they have ranged anywhere from probably 12 months to 2 years to go from sort of being awarded the contract, or being sort of negotiating a price, or getting a price that both parties can stand behind to actually putting an ink on the page. So these are highly bespoke contracts. There's lots of parties involved. If we take one of the examples, I mean, I used to work for a developer, so we as a developer had agreed a set of terms with a corporate buyer. Unfortunately, there is another party involved, and that was our investors. And our investors perhaps had a slightly different view of the risk allocation between the parties than perhaps ourselves and the customer. So that had to be then renegotiated with our investors. And you open contracts up to 15 years, they're going to get poured over by investors, they're going to get poured over by external lawyers. And there are a couple of organizations which have had a go at standardizing a long-term kind of corporate PPA. I think the European Federation of Energy Traders had a standardized template that parties could work off. but it still needs at least sort of 2 or 3 turns, maybe more of the dock before you get a commercial agreement between the parties on some of the long-term agreements.
Yeah, Stephen.
And I'd like to echo that distinction between the short and the long term. It's simply a commercial agreement, and in a sense, it has a very solid foundation. At the moment, most renewable energy projects are subsidised in one form or another, and you can argue the toss about whether a CFD is a subsidy or not, but it's certainly got a government backing, and the European Commission is looking to put government backing into PPAs and maybe absorbing some of the credit risk.
Yep.
And in a sense, that we don't want the government to be defining consumers' collective preferences for green energy. We want the buyers themselves to reveal their willingness to pay for green energy. So the concept of a bilateral green trade is a very, very good thing, and it's based on solid foundations. But the downside is it's also based on a bunch of shaky foundations. People want corporate PPAs because they don't trust the green certificate scheme. They don't know how to deal with the credit risk, the counterparty credit risk that comes with a long-term offtake agreement. Who knows how to deal with the risks that come with possibly price zoning? It's under discussion in this country, so we might have different power prices in different places. If you've got a corporate PPA with a wind farm in Scotland and a data centre in Manchester, the wholesale prices might be different in 3-5 years' time. Nobody's dealing with that. We're not dealing with cross-border PPAs anywhere in Europe, almost without exception. So how do we deal with that risk? How do you deal with the risk that I may be talking to an audience of 2 here, but Scope 2 emissions. The reasons why corporates are trying to buy green energy is because their Scope 2 carbon emissions are deemed to be 0 if they wave a REGO flag. That is being debated at the moment, and as I mentioned earlier, the fiction that you're consuming solar energy at night might soon be revealed to be a fiction. So you might need 24/7 clean energy matching. Google has committed that by 2030, 100% of their electricity consumption will be matched with clean production 24/7. Now, you can store electricity, but it comes at a price. And if we move towards this 24/7 world, somehow you have to include the storage in the equation as well. So if you think you've solved your Scope 2 emissions for the next 20 years by writing long-term PPAs, you might find the definition of Scope 2 emissions changes in 5 years' time, and you haven't at all. So there are lots of long-term risks that you simply couldn't deal with in a standardized contract, and you really need to be aware of these longer-term issues before you start striking long-term deals.
Yeah, great point.
Completely agree with that.
I'll just come in then onto the short-term side of things a little bit more, because I'm aware people may be more interested in that. Some people may be more interested in that side of things there. So what we've spoke about is obviously standardization of contracts, and that's really great. And OVO came into the PPA market only around about 4-ish maybe years ago. We did some before, but really properly. And we've signed well over 500 PPAs in that time, and it's been really comfortable. We do work with the Renewable Exchange. Obviously, we work directly as well. And the terms of those shorter term contracts, like by short term, I'm meaning 1, 2, and 3 years, are pretty standard across the industry. So no one is particularly surprised by what contracts we have. So that can allow us to sign things really quickly, and that's really great, and that's been really beneficial to the market. What we haven't mentioned here is also standardized sort of information, I suppose, as well. Is so what does a generator need to present? And again, I'd probably more talk about if you're a smaller generator, what do you need to present to a supplier in order to be able to get a PPA quote from them? So that's really, really helpful, and that has come along. But we have seen where people, they may be a farmer, they don't quite know what information they have. They need to show their half-hourly data, where do they get it from, all that stuff. So that standardization of information is really helpful. And then the final point I'll make is we now have, obviously, GB Energy being set up and the local power plan from the government. If they are able to create some standard information for new build generators, for communities that want to actually build generation, where to get the funding, how do you go through planning, all this stuff there. We believe that's a big push from OVO, is to call on GB Energy to allow that sort of standardization of information of where to get the funding, all this stuff, to really sort of allow these communities to really develop and build their own renewable generation.
Cool out. Yep. Sweet. Shall we take a couple questions from the audience? I actually have no idea how to access this Slido. But there is a microphone right here. It's all yours. Comment, question, whatever. I also briefed these guys afterwards if there is anything too political, and it was a maybe. So, spicy questions. Do you want to take the mic, Pete?
Hello. Can you hear me?
Yep.
What is your view on the future for corporate agreements? If we move toward, if part of the reason, the motivation for signing these deals is to green your power, if we move towards a decarbonized grid, is there a sticky period where we're trying to grow the supply? We're looking to do that not just through the CFD, but through other CPPAs and elsewhere. But the demand is just drying up a little bit because that motivation has decreased. And is there a natural ceiling anyway, and that's just lowering?
Yeah, it's a good question, and one that I was expecting to come up at some point as well. So it's a couple of things really. So I still think even in a world where, with CP 2030 and we theoretically will have 100% renewable, the grid will be 100% renewable, I still think there's a value for corporate buyers in the hedge, right, and fixing a long-term power price. As I said before, that wholesale market volatility is only going to increase as we bring more renewable generation onto the grid. So, having a long-term fix or having the ability to fix long-term, I think there's still value there. I still think that even in a 100% renewable scenario, I still think there is value for corporates in being able to point to a named asset, and you get a lot of publicity benefits, I suppose, for want of a better way of putting it, in being able to say, well, this solar farm located in the southwest of England, for example, this is where, a lot of our energy is being supplied from, albeit, through the grid, but, to all intents and purposes, we are purchasing energy directly from this site. So I still think there is an element of traceability, even in a clean power, a clean power grid. But also I think the main reason for corporates to want to engage with these contracts even after 2030 is that insulation against those even power prices which are going to be even more volatile as we bring more renewable generation on.
Yeah, I think it's a really good point on the on just that hedge against power prices, and I absolutely agree with you on that. I think it's a great question. I'm going to pose one to you guys, which is sort of in the same vein of that, because if you take the corporate PPA side out of the equation and focus purely on the certificates, on REGOs, do you see there being a REGO market in 5 or 10 years if Clean Power 2030 is successful?
So,
I don't think anybody's expecting 100% renewable by 2030.
Yeah, sorry.
There'll be some nuclear in there and some CCS, well, maybe not by 2030. I think there's still 5% gas even in NESO's figures. So I don't think we're going to complete saturation of renewables. Having said that, it does seem that if that trajectory is realized, we're going to have a surplus of green supply over willingness to pay for green demand. It does reveal the strange nature of the CFD, that you've kind of unpicked the REGO, which is still available for sale, from the power itself. And, I grew up thinking electricity was kind of a homogeneous product. It's different at every time, but apart from that, it's all the same. And of course it isn't. Buyers do have different preferences. Microsoft wants to put the logo on the wind farm, for example. People care where it comes from physically, whether it's local or not, and also the source. They might have an objection to solar panels on farmland, for example. People do. So I think there is room to distinguish, but we certainly don't want the kind of subsidy world to squeeze out the ability of corporate buyers or even consumers to reveal their willingness to pay for green energy. And if they need to do that with a PPA strike type asset where they're buying the energy as well as the greenness, we need to make sure that the CFD doesn't crowd that out.
If I could come in sort of OVO stance on REGOs, because we've been quite vocal in the past few years about the REGO market and what we see. So a couple of years ago, we said we were pulled out of the REGO market as in terms of wholesale REGO. So we are no longer a wholesale green supplier. What we do is we buy our power through power purchase agreements. we do still buy the Regos because otherwise we wouldn't be able to call that power green by Ofgem's rules. So we buy that traceability. We have the power and the Rego attached, but we do also really think the Rego market, Rego certificates should be reformed. And so we say that as customers, as domestic customers typically, and obviously businesses, are paying this premium, they're paying for Regos on their bills. We think that those Regos should only be directed towards, and that market should be reformed to actually be towards new build generation. And so there should be a reform, we think, in a sense that maybe you offer Regos for only a certain period of time for an asset, so maybe it's 3 years. Maybe you do a banding system like the Rock scheme, where you have, this site is brand new, is able to have 3 Regos per megawatt hour, something along those lines. And that's our aspect of where we see the Rego market should be reformed, to allow then the premiums that customers pay to actually be incrementally building renewable generation on the grid, rather than it just being a legacy asset that actually already receives quite a significant amount of subsidy already, as you alluded to, RO or FIT, as it were. So.
Brilliant. Fantastic question. Fantastic second question. I cannot believe how fast time has gone. Didn't know PPAs were so riveting.
That
but
time already?
Here we are, yeah. Closing remarks, maybe 1 minute. And I'd also like to get your hot take on the future for PPAs too. You can also say no comment on that, but let's start with you, Dom, and then move across.
My hot take on PPAs. Future of PPAs. Well, I'd like to see more corporate buyers come into the market, and a bit more liquidity in the corporate PPA space. At the moment, I think a lot of assets, particularly a lot of new to earth assets. The CFD is ultimately the only game in town, really, in terms of price. So it would be great, put my developer hat on. It would be nice to have a bit more diversification in my route to market and our pastoral power hedging strategies, and not just have the CFD to fall back on. So, how we encourage more corporate energy buyers to come into the market is up for debate. Whether that's government support to increase the credit worthiness of some of these counterparties, and other schemes which could increase liquidity in that sector. So I think for me, it's I think not just for new to earth sites, but also for operational sites. Bringing more consumers into that market and bringing more and allowing consumers to purchase more of their electricity directly from renewables would be my view as to how where we see this market evolving.
Brilliant.
So hot topics for me: stop talking about or thinking about LCOE, because it's a completely meaningless concept. What matters is the cost to deliver a profile that a customer needs. That's the relevant benchmark. Everything else is fictional and misleading. So you need to start thinking about your ability to match the shape that your customer actually wants, or the shape of the price, the price profile in the market. It's no good dumping energy on the market when it's worth nothing. So the value of your output matters whether you have a PPA or not. On longer term deals, you need also to start thinking about the market rule changes that might bite you. So power is volatile. If we have a zonal power market, it will be much more volatile in each locations. It will be harder to trade PPAs between one location and another. And I mentioned already the reviews of Scope 2 emissions. They may fundamentally change the desire of buyers to buy certain types of PPAs. So watch out for the longer term market rule changes. Even things that change the short-term volatility, change the balancing risk, and then the value of the offtake of a PPA. And those things can bite quite quickly.
Brilliant.
Yeah, cool. I could go again on the smaller, shorter-term stuff. So my closing remarks would be that it doesn't need to be particularly complicated to sell your power. The standardization of the short-term contracts have been really good, and there is a lot of off-takers out there. There's a lot of competition. There's a couple up here, so there's a lot of competition you can do, and that good service can be quite invaluable. So if you are a smaller generator and unsure of how to sell your power, being able to speak to that off-taker is really, really invaluable. The second point then I'd go on is the reform piece on both the Rego market. We haven't mentioned exempt supply and things like that as well, but we think that should be reformed as well to target and actually incentivize, as we're at the distributed energy to be built by communities, by smaller entities to be able to actually supply their locality.
Cheers.
Fantastic. And yeah, I think my closing remarks are just flexibility is the future. It's going to be essential for us to find models that help incentivize new co-located assets, which I know there's a few different parties out there who are looking at different PPA structures to try and make sure they can optimize both the renewable generator and the storage asset, but it's still a very immature market, and it needs a lot of development to try and find a consistent framework that helps give the security that both asset types need, which have very different risk profiles. So it's great to see that there's already quite a few different improvements and ideas out there at the moment, but a lot more work needs to be done to really incentivize co-location.
Brilliant. On that note, let's give a round of applause to our panelists and our audience and the organizers.
And to you.
Oh, thank you.
Yeah, that's right there, yeah.